making $20,000 a year, maybe you're above average and you're a great realtor and you're selling four homes. That's $40,000 a year on a sale price of about $1 million.
All right. Welcome to the next episode of Keeping It Real with Ruhi and Reggie. And what episode is this again, Ruhi?
This is episode 5.
Episode five. Yeah. So we have an awesome guest today, Paul David Thompson. I've been looking you up a little bit, and I can tell that you're really doing some big things. I actually registered for your webinar. I wasn't able to get right on it, but I kind of looked at the replay a little bit. I've been looking at your YouTube channel. You've got lots of great content. So yeah, this is great. I'm glad that we got a chance to connect.
Likewise, thanks for having me. Well, let's have some fun.
All right.
Absolutely, Paul. Why don't you give us a little background about yourself?
Sure. So I'm a corporate drone turned real estate investor, and I used real estate as a way to escape from my corporate job, which, wasn't all that bad, but it also didn't allow me to have control of my time and freedom the way I wanted to. And it's weird about those corporate jobs is when you stop going to work, they stop paying you. So I had to figure out some other different way of making an income so that I could spend more time with my family.
Okay. All right. What led you to the choice that you made to go into the real estate?
Well, when I was in the corporate world, like many of you who are listening to this, it's not that bad of a job, or it isn't that bad. It's just good enough. You're paid just enough to be okay, but you're probably not getting paid enough to create real serious wealth and give yourself real options to do what you really dream and fantasize about.
Right.
You get 2 or 3 weeks off a year, after you've earned some seniority. Maybe you get 4 weeks, and it's just my experience in the corporate world was that I was constantly getting asked to do more and more, and my benefits were becoming less and less. I may have been getting paid in absolute terms a little bit more, but I was just getting worn out with how much they expected of me all the time and just never stopped. And so I thought, well, what can I do to earn an income so that I'm not exchanging my time, I'm renting my time to a corporation? What else are my options? And I considered buying some sort of franchise. I considered starting an insurance agency, and all of those things felt like I would just be buying myself another job by jumping into or from the frying pan into the fire. So I didn't want to do that. So I thought, well, I'll just buy a rental property and see if this real estate thing works like people say. And once I got my first rent check from a tenant, I was hooked, and I haven't looked back since.
That's awesome. That's such a hot topic right now, because, as you know, interest rates are going insane. And so if I am an investor and I want to get in and buy something, but I only have like 15-20% down, how am I going to cash flow?
Right. It's harder to cash flow now than it was when I started in 2015.
Okay.
And so, but that doesn't mean that there aren't still markets where cash flow is available, and doesn't mean there aren't still strategies where cash flow are available. We want to be careful not to pigeonhole ourselves into an asset class forever and for always. Like, go and find something in a market or in a area that you're familiar with that has the ability to cash flow. So, like RV parks, there are options like running an Airbnb business. You don't even have to own the property. You can just be a co-host. So there's a lot of ways to kind of find an angle in this business. There's a lot of different ways to be involved in air quote real estate, that it doesn't have to be the Bird method. Like the Bird, I just got a mastermind call today when they're talking about the Bird method just doesn't work anymore. And I was like, well, I mean, it's not that it doesn't work. It's fewer and far between, right? Because you have to buy these properties at such a deep discount to be able to refinance and actually have some room for the refinance to make sense still, because interest rates are higher than they were 3 years ago, when so many people who may have first heard about real estate started getting involved. So there's other opportunities in the marketplace, and there's always somebody who needs to sell at a discount. And so my fundamental philosophy is that you'll never go places until you make offers to people's faces. So you're constantly in the marketplace as a shopper's mindset, not a buyer's mindset, a shopper's mindset, so that when you find a discount, you're ready and able to buy it.
Okay, well, that's a great segue. What is your different lead generation methods?
So fundamentally, leads can be on market or off market. And on market are easy to find. And when they're easy to find, there's typically a information parity in the marketplace, meaning it's hard to find a discount when there's a lot of information in the marketplace.
Okay.
It's an exchange of value, right? And so, could you find a deal? Sure. But the better place to find discounts is when you go off market, where people aren't actively marketing the property. You're looking for somebody who is on the cusp of thinking about buying a property. And so these leads might be where you actually pay, have a website and you pay for people who's like, I want to sell my house. How do I do it? And then you're the first person that pops up in your area. That's an angle. You can run Facebook ads. You can send mailers to people who have show indications from public data that maybe are in the market to sell their house soon. Like if they've gone through a divorce, that's probably one most common. If they're absentee owners, if they're landlords. And I really like buying properties from landlords. So I spend a lot of my time finding landlords that are just tired of it. And I want to be the first person to think of, this guy's been offering to buy my house forever, and I've just had the worst tenant ever. Like, why don't you take over my problem? That's where I want to step in. And then that's when, in this marketplace, that's when you make an owner financing offer where you can now buy the property at the going rate, whatever it is, hopefully a little bit of a discount, but at the going rate based on the income. And then you subsidize it or finance it based on the seller's equity in the property. And you don't have to go and qualify for 7, 8, 9% interest. You can get 4, 5, 6% interest from the seller.
Okay. So what I'm hearing you say is you're liking to go after absentee owners who are probably landlords, and then you're doing kind of like carry back seller financing.
Seller financing. Yeah. And it's people get confused about this a lot. And for those listening, when we say seller carry back, owner financing, seller financing, owner will carry, it all means the same thing. They're just different terms for the same strategy, where I'm going to make payments to the seller in installments versus an all-in-one cash lump sum at the front end.
I like the way that you put that in layman's terms. That's great for the listeners.
No, absolutely. And Paul, what's your portfolio look like right now?
Sure. So I live in Little Rock, Arkansas, and that's where I cut my teeth in the real estate market. And that's where I currently have my rental properties. And so I have a portfolio of 40 or so rental properties in Central Arkansas. And I will still buy here and there, but I've kind of at the point now where I have enough rentals to comfortably cover my lifestyle. So at this point, I run a fund where I help lend to other real estate investors. So I've kind of gone up the ladder, so to speak, where now I am renting my money instead of renting my properties.
Very smart.
Okay.
And do you recommend, if someone's looking at getting into investing, right? That's what we're trying to do. We're building financial wealth. Do you recommend that the buyer, the investor, buy in their local areas? Or could they hey, you know what? Maybe Arkansas would be nice. Instead of investing in California, I go and invest in Arkansas. My money's going to go a lot further. What do you think?
Well, yeah, it's a good question. And this is really a very personal answer based on your situation and what your current goals are. Are your goals cash flow, or are your goals wealth creation? Because they are two sides of the equation. So in California, there's not much cash flow, but if you buy one property and just hang on to it, the chances of it growing in value significantly are very high. Whereas in Little Rock, where I live, appreciation does happen a little bit, but it's very small compared to these coastal cities, for example, or coastal states. So, I live in what they call the flyover state, where people fly over it and no one ever goes there. And it's because it's just the population density is low. So the cash flow is much easier to find. So if you're looking for cash flow and you're looking to replace income, you want to own properties that have the ability to very easily natively create cash flow. You don't want to buy an alligator that you're having to feed money into it all the time. You want it to pay you. You want the tenants to pay you and your mortgage fundamentally. And so it's very much makes sense to look for cash flow where it makes sense for where you live. If you live in California, you're probably not going to find a lot of cash flow. You may have to go further afield. But I tend to tell people, start in a market that you fundamentally understand. And that's typically where you live. And you just go out in concentric circles until you find a pocket where cash flow is possible. And in some places, you may have to go, if you're like in California, you may have to go to Bakersfield, or you may have to go to Reno or something really far out before you find that place where cash flow is possible. And once you go 2 hours away, whether it's 2 hours away or across the country, probably doesn't matter that much. But you find a market where you fundamentally have some sort of connection, you intuitively know the area, especially if you're first getting started. Start with something that you know well, so that you don't have to overcome the information barrier about a market you've never even been to before.
Okay. All right. Do you do any other, like, it sounds like you're mainly kind of a buy and hold. Do you do any type of wholesaling or flipping?
I've done, if it can be done in single family, I've done it over the last 8 or 9 years, and I've wholesaled, lease option, flipped, everything under the sun. And you got to understand your season of life. And if you're looking to generate more cash, if you have a bucket of money of $50,000, you can't buy very many properties with that. But you might be able to find some deals, do some wholesales, flip a few houses, and grow that basically bucket of capital into a bigger bucket of capital that gives you the option to then buy properties later on. So it kind of depends on your situation. So yeah, absolutely. You do what makes sense in the marketplace, and you do what makes sense for your current situation, depending on your current goals.
Okay.
So what do you mean? So for our listeners out there who are very new to this, what does wholesaling mean?
Yeah. So wholesaling is where you get a property under contract, and then before you finish the closing of the transaction, you assign your interest to a third-party buyer for a fee. And so when I'm running the numbers on a single family house, we typically tell people to run the Mayo formula, the maximum allowable offer, times some sort of discount rate. So typically it's between 65 and 85%, depending on the market. So we'll say 70% just to make the numbers easy. So if it's worth 200 grand all fixed up, you discount it to 70% of value, which is $140,000. And then you take your repairs off of that. Let's call it $40,000 of repairs, and you'll want to make a $10,000 assignment fee. Then you would take 10,000 from that, and your offer would be 90,000 for a property that's worth 200 once fixed up, that needs 40 grand. And so you could find that deal, hey, and negotiate yourself into a situation where, hey, I can buy this for 90, I can close in 30 days, and you get it under contract, and then you go and find somebody else who you know has the cash. They can throw 100 grand into it and buy it right away. It's an obvious deal for them. You make the $10,000 spread. That's wholesaling.
Awesome. Thank you for explaining that.
That's something that can be your entryway if you don't have the capital, wholesaling, and then maybe go into flipping. And then once you build that capital, then you can go to the buy and holds for, those that are trying to get involved in real estate investing. Would that be a fair thing to say?
Very common path, very common, because you have to have all 5 pillars of wealth in order to make a deal happen. It's time, money, network, knowledge, and a value proposition opportunity. The value proposition opportunity is the deal, the property. You've found a piece of property and you found it at a discount, or you can rent it and you can rent it for more than what your cost of money is. This is an arbitration play, right? So this is the value opportunity vehicle. It's your deal source. The other 4 things that you need: time, money, network, and knowledge. When you're first getting started, you probably don't have a lot of money, but you do have time. You can spend your time investing into podcasts and books and YouTube videos to learn the knowledge, and then you leverage your network to help solve the problem. And you do that with every single transaction, every single kind of business transaction that's happening out there. Those 5 things are happening every single time.
Yeah, that's awesome. I mean, I think that that is something that, as a investor and someone who's just starting out, the ability to go in and say, okay, you know what, I can call. I don't need to look on the MLS. I don't need my agents to necessarily do this, but I can go and look to see where there is someone who's got maybe a for sale by owner or a distress sale or something like that. And maybe initially you purchase it, but what I'm hearing you say is go further out. So in our area, Reggie, we're looking at maybe places in Sacramento or
Fresno or something like that.
yeah,
Central Valley, like Merced, or Modesto, maybe,
Stockton.
Further out where cash
Stockton.
flow is more at least close to being possible, right?
Yeah. Well, and I mean, back 15 years ago, 16 years ago, I was putting together deals for my clients because they wouldn't qualify on their own, and we were getting seller financing.
Yep.
And the sellers loved it because they were free and clear on the properties. And and they were making 5%. I think we were getting a 5% deal, which was good, because I mean 14 years ago we were at around the same, like the 7% mark.
Sure.
So, and as a seller, if you're financing, you can always foreclose. And I know one of my clients ended up getting foreclosed on, and the client got their property back, which was a sweet deal for them.
It ends up being a pretty good win for the owner, doesn't it?
Yeah, absolutely. I loved what you talked about with the Airbnb. I have a lot of clients recently who've been asking me, hey, can you Airbnb this for me? And, I'm willing to pay property management fees on it. I'm willing to do whatever. Can we talk about that a little bit, just so I can wrap my head around it?
Yes. So let's go back to this principle of the 5 pillars of wealth creation. What is the value creation opportunity there? Somebody has access to a property, but they don't want to run the Airbnb. They're saying, hey, Ruhi, would you run this Airbnb for me? And you think, okay, well, do I have the knowledge? Do I have the time? Do I have the network of people that can help me do this or not? And you decide, is that value proposition statement worth it to you? If you say yes, you're like, you know what? I've really wanted to get into Airbnb. I'm looking to grow my real estate acumen and my experience, but I don't really have the cash to buy a really nice property that would qualify for an Airbnb. But I could then use my time, my knowledge, and my network to create a business, basically renting your time to somebody else in order to get an income from managing the Airbnb. It's called co-hosting. And so when you co-host somebody else's Airbnb, they give you permission to lease the property and manage the turnovers and make sure it's cleaned and deal with client or customer communications, right? So this is a business that allows you to use what you have access to help somebody else who doesn't have the time, the energy, maybe not the knowledge to pull that off. They're using their network, you, to leverage your time and energy to go create value. And so we're always thinking about these things in the marketplace is use what you have access to. And if you don't have time, then you need to go use, I'm sorry, if you don't have money, you need to use your time and your knowledge and a combination of your network to provide value to somebody else.
So I can go onto Airbnb and rent out, a few different properties in different areas. I know there's going to be a concert, or I know there's going to be some different things. So I'm going to rent them out. And then do I need to ask permission to co-host it?
Yeah. So if you're in a situation where you're going to lease it from a owner of a property, that's what they call a master lease, because you're going to turn around and sublet it. And that master lease would specifically call out that I intend to lease this on Airbnb. I'll take care of the hassle. Here's the damages that I'll take care of. Here's the damages you'll take care of. And that's something that's called out in that lease. That's one way of going about it. The other way of going about it is just being a co-host for somebody who already owns a property, and you don't have any lease protection or any lease arrangement. You just have a business contract that says, I would be willing to work for you and co-host your properties. So there's two different options. If you want to ultimately buy the property, you're probably better off going down the path of doing the master lease. It's a harder pitch. It's a harder conversation and a harder situation to set up. But it's like, hey, Mr. Landlord, how about I help you get this ready for Airbnb? And in 3 years, maybe I'll buy the property from you. But in the meantime, how about we run it as an Airbnb so you can pay down your debt and you can afford your mortgage that maybe has gone up because it's an adjustable rate mortgage, something like that.
I'm just curious, all these things that we're discussing today, are these things that that you teach in some of your training and everything?
Yes, I have a series of courses that cover each of these particular topics. And my particular area of focus right now is deal finding, because right now in the marketplace, I think it is the best time to be looking for deals, and everybody feels like it's not the best time. And I always like to zig when everybody else zags. Like, I want to be super looking for the opportunity when everybody else is afraid. And a lot of people feel like they're afraid right now. So now I'm looking for buying properties on the dip and buying properties with owner financing at really low interest rates when other people aren't thinking that way. So yes, I do cover the different ways of finding deals and the different ways of structuring your transactions so that you're setting yourself up so that fundamentally what you want to do is you want to own equity so that that equity can create cash flow for you instead of renting your time out of somebody else. You ultimately want to get away from that. You never want to retire renting your time out. You might earn some money, you might learn, get some knowledge, but you always want to get in a place where you're owning the asset and building equity in something.
Well, talking about timing and zigging and zagging, there's a lot of stuff going on in the news right now about the Sitzer Burnett trial. And now there's actually another one in Chicago, I believe, where instead of the sellers, now it's the buyers that are, in a titsy and, got the lawyers involved. Tell me how you feel about that and how that's going to affect the real estate market and investors such as yourself in general.
Well, in general, I don't overreact to the latest craze or the latest fad in the marketplace. I always want to keep my ear on what's happening, keep my finger on the pulse of what's happening, so long as it, especially if it's directing towards creating some sort of new law. Someone just got through asking me about, what do you think about the new proposed law about 1031 exchanges? I was like, I'm not worried about it till it's gotten through the House, and there's legal precedent in place. It's like, until the law is in place, I'm not spending a lot of time worrying about what I can't control. I worry about what I can control and what I have access to right now. And that is going and finding properties at a discount from a seller where I can own equity. And I want to buy on the fundamentals of real estate, which is I want to buy for cash flow and equity. And I want to buy that based on current performance, not projected pro forma performance, right? So I'm not trying to buy appreciation. I'm not trying to buy future rents. I'm trying to buy the pattern of current rents. And based on those conservative underwriting, sometimes it's hard to buy properties, but you just keep working. You just keep making offers. And there's somebody out there right now that would just love to hear from you. And you just haven't put forth the effort to drop that in front of that particular seller. All of that is something you can control. What's happening in Chicago and what's happening on social media, stop it. That is a ecosystem that is just spinning your wheels around, and you're all worried about things you can't control. Go control something, or go take control of what is in front of you. And that is buying assets at a discount.
That's very well said. Very well said. I appreciate that. Do you have anything to add on that, Ruhi?
No, I think it's actually brilliant. I always like to kind of pivot when everyone else is going one way. So I totally agree with your zigging and, zigging when everyone else is zagging kind of thing.
Yeah.
So what do they need to do if they want to, sign up for a webinar or learn from you? What do they need to do, Paul? What do you, give them?
Yeah, the best place to find me is at my website, pauldavidthompson.com. It's spelled about the same way you would expect those names to be spelled. I have the curse of a common name, so I had to use all three of them. PaulDavidThompson.com.
Awesome. Awesome. And to be a little bit off topic, I wanted to find out what your thoughts are on the next year. What are we looking at? What do you think? Where are we heading as far as the real estate market with everything going on in the world?
There's a lot going on in the world right now. And of course, most of it's outside of our control. And as we go into 2024, I like to pay attention to what the Fed is doing and thinking, because they pull the levers that affect our lives the most as real estate investors. And from all behavior that we see from the Fed right now, they have managed to get inflation mostly in control. They might raise interest rates one more time by the end of the year. We don't know. And by the time this goes live, you'll probably know whether or not that's actually happened or not. Sounds like they're going to stay steady. And I think the Fed is going to watch and monitor the market for a while. And until there's a significant drop in the jobs market, which is another responsibility of the Fed, they have no incentive to lower interest rate again. So I believe this is the new normal. This is the cost of money for a while, at least for the next 2 or 3 years. And if and when, probably when, interest rates do go down again, because the jobs market tanks for whatever reason, then the values of real estate are going to go up even higher. And what's so interesting about the economics of the housing market is you would expect that the value of houses to go down, that the value of housing to go down when interest rates went up by 3 times. But the demand is so high because the supply is so limited. We keep making more people in the US. Our population is growing with immigration and our own organic birth rate. Our population continues to grow. Now, the growth of that has slowed down a ton or a little bit, but we continue to grow on an aggregate. So we haven't kept pace with the number of new housing builds in years. And I see nothing on the horizon that changes that anytime soon. So there's still too many people for too few houses. Therefore, the value of housing will continue to stay high. And then when interest rates go down, whenever that is, the value of housing will continue to skyrocket.
Yeah, I tend to agree. I heard a interesting fact that, and this is for California, that 30% of people own their homes outright. Like they have no loans on them. And then there's another 20% that are carrying interest rates below 4%.
Right.
So in my mind, though, that group of people are not going to do anything. So they're
locked in place.
Yeah. So
golden handcuffs.
Yeah. And then the other 50%, the people who used to retire and move into, facilities and sell their properties and move into facilities and pay for them, after COVID, their mindset has changed. So, and I just heard this in a meeting yesterday. So, that got me thinking about what you were saying. Who can you go after who would want to let go of their property, and without giving away too much, because I want them to, and I want to attend your course too. But I want to kind of get a little golden nugget where.
Sure.
What do you think?
The people who own it free and clear and are getting older and don't want to manage it anymore. That's your opportunity in the marketplace right now, because they would love to get 5 or 6% interest on their money. They don't want to pay the taxes on this property they've owned for all these years, and to the point to where they own it free and clear. They paid down their debt entirely, and they're probably baby boomers, and they're getting older, and their bodies are wearing down, and they're over it. And they've been through the pandemic, and they barely survived it, and they're wondering what in the world they were doing to having rental properties during that time in the first place. And that's the opportunity for you to jump in and make offers at scale in a way that is helping solve the seller's problems. That's the fundamental problem that most investors miss, is we make offers thinking entirely about what's in it for us, and we don't understand directly to the seller what's going on in their lives, and we don't tailor our offers to solve their problems.
That makes sense.
Very well said.
Yeah, that totally makes sense. And maybe the people who have the negative mortgages, the what are those?
Reverse mortgages.
Reversible mortgages, yeah. I mean, that would be kind of where I would go down the path of.
Yeah, they've got a problem too.
Yeah, because they're looking at getting cash flow, and that's why they're going negative.
Yeah.
And so that would totally make sense. So what are you offering our listeners, in our toolbox? What can they expect, and how you've shared your information. We're going to have it linked below. Reggie, is there anything else you'd like to add?
No, I think, you've covered everything. I'd like to, definitely continue to keep this thing going. And one thing I was curious, what's your interaction with real estate agents? Do you have any trusted realtors that you work with that kind of help you,
Sure.
with things, find properties, make offers on maybe things that are on the market and
Absolutely. Yeah, I am an equal opportunity buyer for sure. So, and I think everybody listening to this should be too. You go and find the deal where the deal is. And if the conduit to that deal is through an agent, that's fine. If the conduit to that deal is through a wholesaler and the numbers make sense, that's fine. If you can spend the time and energy it takes to go direct to seller, that's fine too. All of these have a price associated with it. What's amazing about working with a really good agent is you're not paying an agent on the front end to go and do all the work it takes for them to find a deal. They get paid when you close on the transaction. So when you keep that in mind, you don't want to wear out your poor agents, but you want to find an agent that specializes working with investors and they know the market that you're in, especially if you're doing it from far away. That real estate agent is your best conduit into the insights of what's happening in that marketplace. And a really good agent is something that I continue to use. I talked to my agent this morning about a deal that I'm trying to work on. And, I was like, hey, I thought it was going to happen this way. And she's like, oh, no. Like you misunderstand what's happening here in this situation. And she gave me some more in details like, oh, okay. The property's in a lot worse condition than I realized. You've seen it. I haven't. Let's make an adjustment. And so we're always looking for the team that you're working with, and contractors, agents, title attorneys, closing agents, property managers. These are all necessary. You have to use your relationship capital in order to deploy your strategy in the marketplace. You are not going to do this by yourself. So go and make friends and reach out to people who know your market and can help you find deals, because y'all's interests are aligned. They get paid when you buy a deal. So work with somebody who knows the market.
Got it. Okay.
Totally makes sense. Yeah, I love that. So then are you working with agents are you just looking in your current state, or are you looking in other areas as well?
I have done deals in, I think, 9 states at this point, but I have simplified my marketing by quite a bit. And what I do is I focus on an area that I know well. So I do single family in Central Arkansas, and then I do multifamily in the Dallas, Texas market, where we do land development type projects. And so I have a team and an agent that I work with there locally that helps me find the insights into the marketplace. And so I'm always looking for an angle where I can place a new commercial asset into the Dallas-Fort Worth marketplace, because it gives me a combination of both cash flow and the potential appreciation that I don't get in Arkansas.
Awesome. Very good. So sorry, going back to my previous question, is there something you want to put in the toolkit, Paul, that would help our listeners and then also be able to engage with you?
Yeah, for sure. I'll give you guys a coupon code that I'll make just for you guys, and you can go and find my current course, Real Estate Deal Finder, and I'll give everybody listening to this a kind of an exclusive coupon code just for this podcast. How's that sound?
That sounds wonderful. Wonderful. Thank you. I mean, I know I've learned a lot just in the half an hour that we've been with speaking. So I appreciate that. Thank you so
Especially
much.
about the Airbnb co-hosting. That's a strategy that I've never heard. So that nugget right there, I think, is be very valuable. I want to look into that a little bit
Worth
more.
the price of admission right there, wouldn't it?
Wonderful. Thank you so much, Paul. Again, Paul's information is all linked below if you're watching this on YouTube. Otherwise, connect with us and we can share Paul's information with you as well.
I finally see I can do so much